Hi guys, welcome back. So the zone we've been preaching for months on this channel has finally hit down at the 70k value area high. This big range between 70 and 60k is where we're looking for bids, looking for a bottom to form for sort of the next leg up. And we're going to discuss that more in depth as I go on. Also going to cover VWAP, going to cover USDT dominance, and just a sort of back and forth with sort of what I'm seeing intraday and intra-week and sort of planning months ahead. But before I do that, please like and subscribe to the channel and let's jump straight into it. All right, so as discussed, what we're looking for, I think I've been preaching it the past few videos, we're looking for this VRVP gap to fill over here. You can see, if I just get rid of this, you can see that we had this big inefficiency of volume. Now you can see the next high volume node forms down here in this highlighted region. Now, why are we looking at that? Well, this is the 8-month composite range over here before the Trump inauguration. So this pump out of that range was when Trump became president. Before that, it was 8 months sideways, just bracketing. So now we're down here, we can basically go to a high time frame and look at this as a big demand pocket. So if you're just playing like supply and demand, this is a very good area for it. Admittedly, the true like order block, if that's what you play, is down here. Now that is roughly 65.8k all the way down to 48k. I don't think we get down to 48, maybe we do. Now what I've been focusing on for the past few videos is this range down here. Basically the 65k level. I've discussed why I wanted to see a fill in there. And, you know, kind of, I'm looking at this value area here as sort of the region to hold. Now, going down to that 65.8k order block would be perfectly fine. Why is that? Because it's a level I've been discussing for ages now. It's a 2024 VWAP. Now you can see we've accepted back inside 2024 value here. Where's the next port of call? We could front run it, get a bounce up here, reject at 80k, come back down and tag that 65k level. But basically the rotation range now is here. It is from 80k down to 50k. Now, 50k is quite low, and everyone's going to be like, that's well below your target. That's correct. I'm not really looking down there yet. I think what happens is potentially we come down around the 65k level. Maybe we dip a bit under. Whether we get the full rotation down remains to be seen. I don't really care if we do. Like, I'm flexible in this range. I've taken my first spot buy as of this morning, as we just hit that range at 70k. I have about 10 bids spread throughout this range. I'm looking for a multi-week to multi-month range to form. We could just get the V reversal back out, but I doubt it. I think what happens is, you know, when price has these expansive legs, it needs time to consolidate. So you can see here we had a big expansive leg. Let's just mark it out quickly. Big expansive leg down here, time to consolidate. Big expansive leg, time to consolidate. Big expansive leg, time to consolidate. You can see the consolidation phases go way longer than the expansive legs. And that's basically because markets spend about 80% of their time ranging and about 20% actually trending. So these trending moves up always need like a pit stop on the way. I kind of use like an F1 analogy. Like you got to stop, get new tires, or if it's NASCAR or something, you got to refuel. You can't just go from A to B from start to finish. You need to stop for these pit stops. And that's what we're seeing right here. So I am expecting some sort of resistance in here. I should say some sort of support. I meant resistance from the sellers. But in terms of support, we want to see maybe some bracketing in this range. Now, whether that leads to a markup remains to be seen. I think anything bought in here, I will be looking at a first TP around 84k. Just basically because that's the rotation back up. We need to see if that value area is reclaimed. We accept back inside for that rotation back to the highs, or if it rejects there and we sort of just bracket between these 2 points. Highly possible. So that's where I am kind of targeting any sort of bounce if we do get it on the high time frame. This is not for intraday plays. This is just for the high time frame plays. So I'm sort of taking the Paradise trading cap off and I'm putting the investor cap on, which comes on rarely because I generally just trade and I don't hold spot. But for BTC, I think, you know, if we are to see some sort of bottoming structure in here, we are to see multi-weeks, multi-months of ranging. And that can obviously go inside and outside of the value. This isn't, you know, a perfect area. This can easily go down and sweep some lows down here. We could even go down to 49k. I don't know, but that's fine. I'll be adaptive with it, right? First buy here, I've scattered some throughout. If we do go a bit lower, I can look to DCA that. The thing is, right, if we start to lose this range over here, then I would say that it's pretty much, we're going much lower. But what I think for now, we focus on this range between 70 and 60k. If we start to lose that, we look for some sort of sweep down here. We really don't see acceptance below this wick down here at 48k. Once again, I don't think we're going that low. I really don't, but you never know. Now we are effectively 50% off the highs here. Now that is a fairly big retracement for BTC. We're about 44%, 45%. But what I also want to pull your attention to is if we go out to the monthly. Now what's interesting here, it's actually the weekly I'm looking at, my bad. I don't use overbought or oversold on RSI as a buy signal. I think it's advice given to retail traders by retail traders is just kind of moot. It doesn't mean shit to me. I think you want to see divergences down there. That's where the sort of money is made. But that said, This is the lowest the RSI has been on the weekly time frame since August 2022. That's a long way back, right? That's a damn long way back. So we can mark that out. We'll mark the other one over here. You can see we are finally coming down to that level now. So this is very, very, very oversold. Once again, I don't use oversold overbought as a trigger. I want to see divergences. But you can see the last time we were down here, we actually did form a divergence. So back in 2022 August, this was basically the bear market after the FTX saga, basically the pretty much the Pico lows before the next mark up. You can see we did get this very nice multi-month bull divergence form down there. That's why I'm saying I think this range can take some time. I don't think we just V-reverse out back to new highs. You know, we had 8 months of consolidation before marking up. I dare say we could have a good period of, like, if this is a bottom, of just chopping sideways. Already, like, I've seen people tag me on Twitter in my comments and stuff on posts I'm making. They're saying, you know, do I buy everything now? Do I go full stack in? It's like, I think you have time. I really do think you have time. Might be famous last words, but I don't believe so. So, what we're seeing down here, that was a very nice divergence. What happened? We got back inside the RSI, we marked up some new highs, and we've just been trending up since then. So we're finally down here. Now, this is why you don't just buy this level willy-nilly. Because if you did that over here on the first touch of it, you would have actually had opportunity to buy further down. Now, if you're DCAing, that's fine, but you never really know where the bottom is. That's always that right side of V analogy I talked to you guys about, which is sort of buying in line with momentum on the right side of the V. But I think down here, what we'd like to see is basically price comes down, makes some low like that, while RSI comes down and makes a higher low like that. Something like that over the weeks or months would be a good signal on the weekly time frame for RSI. We get that, and that's where I think we have more confidence that we are going up. So if you're actually hesitant to buy here and you don't want to DCA in, you want to wait for the right opportunity, you can actually do this. You can wait for that divergence to form on the weekly. It may take a long time, and, like, you know, patience is king in this game, and a lot of people don't have it. So if you do have the patience for it, just keep monitoring this, see if we get some sort of divergence developing, see if that's actually backed up by Awesome Oscillator, which is looking pretty dinky here. You know, there's potentially, I wouldn't call this yet, but, you know, maybe this forms a higher low on the AO here, and maybe this continues up, so that would be like a double divergence forming if we get it. You can see at the same time, back in 2022 in August, also had the divergence formed in here in RSI, Awesome Oscillator. When you get a double divergence like that, that's a very high hit rate signal. Like, RSI by itself is good, AO by itself is good. You get the double, that's a big thing. That's a double confluence right there. So that's what we're watching. Now, in terms of intraday, in terms of buying right now, yes, we might get a reversion bounce off this. Once again, I'm taking the trader cap off for a bit and switching more to the investor cap. I just think this is, you know, we might get the reversion bounce, we might not. But if we actually go to a different chart, I'll show you what I'm talking about. You can just simply buy in line with market structure. Now, I always sort of frame my stuff for newer traders in this channel. If you haven't traded before or you're just new to it, obviously I keep sort of the more advanced concepts out of this, like order flow and whatnot. But if any of the sort of more advanced traders are watching this, then this won't be any news to you. But, like, you can very simply frame these things as just simple market structure, right? So if you actually just want to buy on the right side of V, we've discussed this before. There's a V-shaped reversal. This is, let's just say that's $1 on certain coin. Now, you can buy it on the way down and then you have to weather underwater, or you can buy on the right side of V with momentum when it starts pushing out at $1. You're both buying at the same price. One's stressing as price goes underwater, wondering if they bought the top. The other one is buying on the recovery. So this is what I prefer to do with not the investing, but more the trading. Now, in saying that, look at the H1 here. Let's actually pull up the money Noodle as well. So pretty much price has been capped for the H1 trend since 88K. Now, if you're looking to bid BTC, you don't have to stress about trying to catch the bottom. You can actually wait for some levels to be reclaimed. Every time on the way down, we came into the resistance and trend, we had that double confluence, just like RSI and AO, had that double confluence of levels getting smacked down. So we have dynamic and static resistance here. The static is the support resistance level, the dynamic is the trend. So there's one smackdown. We had it again constantly here. This is the trade I was posting on Twitter the other day and discussing with you guys, waiting for the breakout. Didn't get it, we got smacked down. We came up, we formed a new resistance point. What happens? We had a few stabs at it, rejected down. Now we formed this new one here at around 73.8. Let's just say 74K, just for brevity. So if you're actually waiting to buy, you can wait for this level at 74K to be flipped in line with the H1 trend, because the H1 trend has proven itself as a good time frame of being respected by price. So that's kind of what I'm looking for here. If we start to get reclamation of this level, then I can probably hunt some sort of sweep of a low there, catch a local trade up to this resistance point here. If we blast through that, I'll take my next TP up here. Then we have this big volume gap over here, which basically leads us up to the next one at 84.5. This is where I was looking to get short the other day from this breakout, but we didn't get it. We just pushed straight down. I haven't been nailing the shorts because where I keep aiming for the shorts, we're just not getting the bounces into them. I thought shorting this was pretty low EV, purely for the reason we're compressing between the noodle and a resistance point. That's generally a very good breakout signal. And that also came after a sweep of a key low. So I was like, all right, we've got the sweep, we've got a divergence there as well. We're compressing the noodle into resistance. This is going to be a good long setup. We never got the break above it, right? It just didn't give us a trigger. So I was looking for that break to get short. My longs in a downtrend are counter trend, obviously. So they're generally half risk and they're more used as vessels to get up to a place I want to short with more size. And that's generally the way I play it. So it's trying to catch the long into the better short. But you can also just wait for the short. But anyway, if you're looking to long down here, I would wait for the 74K low. If you're like a newer trader, obviously if you're more advanced using order flow and footprint or whatever, you can try to snipe the bottom. But if you're just like wanting to get in line with trend, that's why I developed the system with the money noodle, just because it's dead simple to follow, even for beginners, and I use it and have done for years. Yeah, just wait for that. So 74K reclaim, in line with trend, we get that, hunky-dory. But what may happen here, we may trend down a bit more, come up and bounce, can't get above a level, and then once again, we'll basically just print another one of these, and it's just a rejection. And then that will be your level for trend to come down. You're looking for the reclaim of that. Eventually the structure will flip, and that's where your long opportunity will present. Until then, I don't think you need to worry too much. Now I am trying to keep this video a bit shorter because we all know that old Grandpa Paradise likes to waffle, but let's just go to USDT dominance quickly. The only chart you needed to be long in the last 122 days. For those that don't understand, this is USDT dominance, so this is stablecoin dominance versus the rest of the market. And when I say only asset you need to be long in the last 122 days, it's a tongue-in-cheek joke. Basically saying all you needed to do is just be in cash for the last 122 days, because as USDT dominance is going up, the whole crypto market's going down. And I've been teaching this to you guys on every single stream as a risk on, risk off barometer. We did have that brief period where we dipped down under the noodle here. This is where we had that bounce in the market. Once we reclaimed, this low over here was actually pretty much that low there. Once we reclaimed it, got back above the trend on the daily, that was a signal to go risk off again, which we did on the channel, which we did in Miles High Club, which we did on Twitter. But you can see like this is just in a roaring uptrend. That means everyone's flocking to stables, which means everyone's going out of risk assets, which means risk assets, aka crypto, goes down. So eventually this will top out. Divergences do work on synthetic index charts. We're not seeing anything on the daily. Potentially we might see a 12-hour form. Potentially we might see a 4-hour form. In here, we need to wait till these actually lock in. But for now, roaring uptrend, which means you don't need to be rushing into deploying your capital. Now, I know I said I took a partial DCA spot buy in BTC. That's just my plan to allocate capital between 60 to 70K and just fill bids very slowly, because that sort of thing you can just lock away and wait till the next cycle leg up. Knowing me, because I'm a degenerate trader, I'll probably just sell a lot of that at 84K if we get a bounce up to the next value area. But if you want to hold it longer, you should. So yeah, USDT dominance, just keep an eye on that. If any divergences start to form, something like that, and this forms something like this, then I think we'll see that bounce in the market. Until we get that, all your job is to observe and wait and make plans. Once we see this top out and give a divergence, at the same time we see this start to reclaim trends as well as key levels, that'll be your trigger that maybe we get some upside, you can go into the market. And for things like that, I'm not really looking at any alts because they look terrible. The only one I'm looking at is the one I have been trading religiously, and that I'm currently in a swing trade in on the 4-hour. Is just hype. I'm pretty much just looking to accumulate more hype as we trend up the 4-hour noodle. 4-hour noodle's been very good so far. You can see all of these bottoming structures in there. The trade I took last stream I did with you guys, is the one I TP'd up at this level. It was a good TP. I bought some more spot. We came down to the 4-hour level in the Miles High Club. Link in the description if you want to get daily updates on those trades and new ones come in, as well as all these indicators here. You can follow that link and join. I'm pretty much going to leave it there, but hype's the only alts I'm watching. Other than that, focus on BTC accumulation on high time frames, and any sort of reversion bounces. We're looking for trends and key levels to be reclaimed, as well as something like USDT dominance to tap out so we can see that money flow back into crypto. All right, I'm going to leave it there. A lot of talking. Thank you for joining, and I'll see you guys in a few days. Cheers.